have Opeyemi Ani. He's a research analyst at Cordros Securities. He joins me now to make sense of what's playing out in the equity space today. Thank you so much, Opeyemi. What are we seeing play out here in the market today? The market is down again for another session.
Yeah, so right now what we're seeing is that investors are slightly conservative on pricing and are just, allowing or looking for a balance of where, they're trying to enter into the market. And we're seeing a bit of profit taking as well from the significant gains over the last few months. So investors are just pretty much being conservative on pricing at the moment.
All right, profit taking, you say we're seeing some key bank names here, Guaranteed Trust Bank, Zenith Bank, and UBA coming in on the laggards table today. We're seeing, is that where investors are cherry picking?
Sorry, can you repeat that?
I said we're seeing some banks' names on the laggards table today, Guaranteed Trust Bank, UBA, and Zenith Bank. Are we seeing investors book profits in these stocks?
Yeah, we're seeing investors book profits in the banking stocks. The banking stocks have gained significantly over the last quarter, and the last month again about 6%. Investors have really keyed into these high dividend yielding stocks. So just a bit of profit taking. But as we all know, the situation in the market hasn't changed, and it's likely that investors will come back to the market, and especially into these banking stocks. That you have guaranteed dividend distribution.
All right, but when you look at how the market has played out in the past 3 months, or let's say in the past quarter, for you, what has been that key driver for sentiment in the market? We're seeing 3 months, the market is up about 37%, although it's yet to down, yet to date about 30.6%. It's up about 30.6% yet to date.
Yeah, so I mean, it's been an interesting market for equity investors. The domestic economy and the recovery kind of trudged along in November, but Nigerian stocks were way ahead after rising about 14% in October. So another 15% again in November, the best monthly return that we've seen in about 3 years. And the major driver really was the abysmal yields in the fixed income market and the lack of investable alternatives, which have driven local investors back to the equities markets. In November, I mean, activity levels were unlike anything that we've seen in a long time. Value traded was about 142 billion for the month, which is probably the highest we've seen since January 2018. In the middle of the month, we also saw, in reaction to that PMA, where most of the yields crashed, and we saw that the circuit breaker was triggered in the equities market for the first time since 2016. We saw that was triggered for the market was shut down for a few minutes just to allow market activity to cool down. The market ended up getting about 6% on that day. So in terms of sectoral gains, mostly seeing investor interest in industrial goods stocks. Industrial goods stocks gained about 24% last month. Mostly cement stocks, Danksem, Bua, Lafarge. Investors increasingly opted for these cyclical companies, companies that their earnings are tied to economic growth, and they're expected to outperform for the year, especially after coming out of lockdown. There's a lot of interest in the telco stocks as well. Local investors have piled into MTN. Foreign investors have looked to Airtel Africa to exit the market. So it's an alternative means for them to exit the market amidst the FX liquidity in that space. So I mean, just to underscore how desperate that these foreign investors are, Airtel in Lagos trades at a 33% premium to Airtel in London. So if you just do a back of the envelope calculation there, you're seeing that this transaction is happening at around 520 naira to the US dollar, which is quite significant.
All right, but still looking at the low yield environment in the fixed income space, though, you think where do you think we could see the equities market play out the end of the year?
Yeah, I mean, year to date, yeah, market is over. It's up over 30%. Best performing stock market. November was the first time that we've seen the market record 5 consecutive monthly gains. If you're a betting person, in the last 20 years, the market has only lost in December 5 times. In that same period, the market has gained in 12 of those years, and 10 of which had December gains. So, I mean, it's great odds for a 6th straight monthly gain in December. In terms of valuation, market is now around 10 times earnings, which is fairly valued anyway. So, in the short and medium term, I think, yeah, you're right. The main drivers of the market haven't changed. The MPC reiterated at his last meeting that lower for longer is the theme for interest rates. So we're likely to see interest rates at these low levels for quite a while. The system is still awash with liquidity. We've seen, yields are at levels right now that don't make sense for a country with inflation levels such as this. So, I mean, it's been a long time since equities look so good compared to fixed income. So local asset managers really don't have a choice but to seek alpha yielding opportunities in the equities market. Though the risks are significantly higher, but I mean, half a loaf is better than no bread.
Definitely been a while since we saw the equities look this good. Opeyemi Ani, thank you so much for your time on the show. Opeyemi Ani is a research analyst at Cordros Securities.